Well, let's take another look at how the markets closed the day. To recap, we're seeing all three of the major averages in the green because of basically what Jess just said. We're seeing some progress, I think we can say, on the stimulus talks, although where they go from here is anybody's guess at this point. The Dow closing up just around 150 points. So for more on what exactly this means for the market and what the market's expecting going forward, we want to bring in Jim Bianco. He's president and CEO of Bianco Research. And Jim, great to have you back on the program. Let's just start with the stimulus talks. What do you think the market is pricing in at this point and convinced that we're going to get at some point?
I think it's been pricing in stimulus talks for some while. I think, around $2 trillion is what it expects. But more importantly, it thinks it's a good thing. It doesn't see it as being a potential problem in terms of heavy-handed government or too much inflation right now. So whenever you get talks that we're getting closer and closer to stimulus, not only does the stock market rally, but bond yields go up too. We're at 86 basis points right now in the 10-year note. That's the highest since June 9th. We're only a handful of basis points away from the highest in the post-pandemic era. If we get above 90, we'd be at the highest in the post-pandemic era as well too. The bond market is suffering a little bit because $2 trillion means a whole lot more issuance, and that's going to probably weigh on prices as well too.
Well, Jim, going off of that, I wanted to ask you about that because in your notes here, you say low and stable rates are the basis for the market rally since April. We're seeing rates clearly rise here. Is there any reason to be concerned about that?
Not yet, but yes, I think one of the things that's been really pushing this rally is interest rates are at these unbelievably low levels, point something or another for the 30-year. You got 400,000 wealth managers. Yes, you do. Pushing 36 million accounts. Yes, they do. And telling them all, get out of bonds. There's no use. They're useless instruments. And you got to get your money in the stocks because they just sit there at 0.7, 0.6, 0.8 and don't do anything. Now, if they start moving up, and I mean like above 1% towards 1.25%, that could change the game, and it could be very negative for equity prices because at that point, you'd have to worry about inflation. You'd have to worry about higher costs in terms of higher interest costs. And the way you stop rates from going up, the Fed will try yield curve control, probably won't work. They got to stop buying bonds. They got to stop stimulating. The government's got to stop handing out checks to the leisure and hospitality industry if rates go up enough. And that could be very negative. Right now, you're moving 86 basis points on your way to 90, no problem whatsoever. But it bears watching to see when this stops, this rise in rates.
Jim, I wonder if you're of the camp that thinks also a contested election is priced in. And therefore, the thinking goes that once that's not the case, which ultimately will be at some point, somehow, with some winner, then the market will take off because that scenario will be in the rearview mirror. And whether Trump is president, whether Biden's president, whether you got a blue wave or not, all that will be good. Any of those scenarios is better than the scenario we have right now.
Yeah, I am of the camp that let me put it this way. If you look at the poll analyzers, 538 Cook report, they've got Trump, and I'll say from his point of view, about a 10% chance of winning the election. You look at the betting markets, they've got him at 42. That is an unprecedented spread between the two. Investors seem to line up with the betting markets, thinking this is a lot closer. They've got the idea of a contested election, probably about 40% as well, too. And that is a problem, especially if you get this red mirage that's been thrown out. What's the red mirage? Wall Street Journal, New York, NBC poll earlier this week said 86% of Republicans are going to vote election day. So that means election night, when you just count the polls, Trump's in the lead with more than 270 electoral college votes. Then you start counting all the mail-in ballots. A week later, Biden's in the lead. That's the worst case scenario for the market. You change after election day, the winner, and expect half the country to go along with it. I think that there's a fear in the market that might happen. If it doesn't, and let me define that, whoever emerges election night is the person who ultimately wins. I think, that would be a big relief for risk markets, especially the stock market.
All right, Jim Bianco, we see your little cat. Is that what that is behind you?
That's my cat.
Trying to make his appearance. Jim Bianco, always great to have you on the program, president and CEO of Bianco Research. We'll talk to you soon.
Thank you.
Coming up here.